I'm Don Tapscott.
And I'm Alex Tapscott.
And this is What's on Tap. Alex, let's start in the news. Bitcoin difficulty level fell by the most ever on July 4th after China cracked down on Bitcoin miners. Some people are saying this reveals weaknesses in Bitcoin's design. What do you think is that true? And what can this tell us about blockchain infrastructure in general?
Yeah, so this is part of a broader crackdown in China on Bitcoin mining as an industry. And what's happened is that a lot of miners have been forced to shut down, and some of them have relocated to other countries nearby. The difficulty of the Bitcoin network is a reflection of the hash rate, which is basically just the number of computations that's required to validate any block in the blockchain. And it generally tends to trend with the price, and maybe it's the tail wagging the dog, but they seem to move together. It's not an indicative of anything really, other than a slight dislocation in the short term. What happens when the difficulty level drops is that all of a sudden mining becomes profitable for the marginal miner, the miner who maybe couldn't have produced Bitcoin or mined Bitcoin profitably at a certain difficulty level now can. And so what happens is that it's a self-correcting mechanism. More miners come online. And as a result of that, it finds an equilibrium. And to wit, we've actually seen some reports that some Bitcoin miners have been generating outsized profits because of the decrease in the difficulty level. It just takes less energy, less computing power to mine new Bitcoins, right? So if that opportunity is available, then the market's going to find a way to exploit it. And that's sort of part of the natural corrective mechanism that the Bitcoin network has. So no, it doesn't tell us anything about Bitcoin mining other than it's a really useful system for securing this kind of network.
Short-term pain for long-term gain. I think there's a bigger point here too about just China. I give a talk this week to this big conference in China, recorded a talk, and I always have difficulty doing that because of the schizoid attitude of the Chinese government. Basically, they're making these huge multi-billion-dollar investments. Xi Jinping says blockchain and AI, two big technologies taking us forward. They're charging ahead with their own central bank digital currency, blockchain use cases, and so on. But I think that the hammering down on crypto and Bitcoin and these open protocols is really a mistake, because they're going to be really important to the future of this internet of value, just like they are important to the internet of information. Mm-hmm. So you ban them and you hurt them at your own risk, and hurt yourself as well.
I've heard this analogy that the ban or the position against Bitcoin is similar to the Great Firewall of China, right? Which is that it's not like there's no internet in China, obviously. There's more people online in China than anywhere else in the world, any country in the world. But it's a very different kind of experience than it is for people in other countries, specifically in, the U.S., Canada, places where we're located. What do you make of that analogy? Do you think that's sort of reasonable?
Yeah, I think it is. And but like with the Internet of Information, which is carefully monitored in China. I remember sitting in the first class lounge in an airport in China, and I asked for internet access, and you had to scan your passport to get access to the internet. So everything that occurs is being tracked, linked to an identifier, which is your passport number. So that's a tough call. How bad do I have to go on and check my email? Not that tough call.
Yeah.
And people get around this by using a VPN. But of course, if you're using a VPN, then you come to the interest of the government as well. And that probably goes in your social score. So you use a VPN a lot, and maybe your kid doesn't get into a good school or something like that. So, ultimately, it's the power of this thing is its ubiquity, its interoperability, its openness, and its freedom. That may be naive, and we have these two very different views of how the world should evolve over the next period, and how technology should enable two different world perspectives.
Interesting. Another thing that we've seen recently is that the DeFi space, much touted, has bounced back recently. The value of some of these emerging, protocols has improved, and we've seen this sort of key metric of total value locked. So this is the amount of money that's basically pledged to these different protocols. Sort of think of it as like assets under management, right? For certain financial or deposits for financial institutions that number's exceeded $50 billion. So it's a good size number, but we always like to compare things to the traditional financial services industry, where a single bank could have over $1 trillion of deposits. So it's still relatively small. But to me, it's quite interesting what's going on here. Basically, that we're seeing these new kinds of organizations, I guess, built on software that are trying to recreate and hopefully improve on how banks and other financial intermediaries provide services, except instead of being permissioned and requiring an account with a bank, they're open, permissionless, and so available to anyone. It's still pretty cutting edge, I'm not going to lie. I'm not sure that this is something that a lot of people in banks and other large institutions are thinking about, but maybe they should be. And I'm curious, from your perspective, given all the work that the BRI has done and we've done together looking at financial services, how enterprises and how bigger financial institutions should be thinking about some of these real bleeding edge, still relatively small, but obviously fast growing projects and use cases.
Well, when it comes to financial services institutions, I think you've made the point that we have these traditional models that I won't go through, but they're all about centralized systems and banks providing a very deep role as intermediaries throughout the financial industry. And then we have this thing called open finance, which is increasingly being embraced by a number of large financial institutions. But the next step is DeFi. And once you go to DeFi, you start talking about eliminating certain things that you do. Cannibalizing our installed base, as they used to talk way back in the early days of the internet. Why would a retailer set up an online store? But I think that what's happening is that you have a group of very smart institutions that are taking this threat, and it's an opportunity as well. Seriously, it's not just to avoid disintermediation, but it's to re-intermediate, to create new value in the middle. And this started, I think, around the whole issue of digital assets. You have companies like Fidelity Digital Assets providing real leadership in this space, but it's now they're making its way into sort of many of the other core functions of the financial services industry. And sometimes you've got to disrupt your own business model. Barnes and Noble should have done that. Blockbuster should have done that. There are countless examples of the graveyard of companies that have been eliminated by previous technologies. And as we've argued, blockchain is probably the biggest of them all. So the term burning platform, it actually comes from the oil industry, where you're on a platform that's on fire. And at a certain point, the costs of staying on that platform become greater than the costs of taking a leap, even though the unknown state or the new state is unknown. And increasingly, that fire is raging. And it's just fascinating to see amongst our clients who are moving quickly to take action and move to a new platform.
It's a really interesting point. We've seen a lot of financial institutions embrace digital assets quite seriously. I think that in the early stages, there was a lot of talk about these blockchain proofs of concept, but now I think the banks have sharpened their focus and they realize that a $2 trillion asset class that's rapidly growing in size and influence is something they ought to pay attention to, basically. So you see, banks offering crypto custody solutions for the first time. And actually, there's a Swiss bank, albeit a startup called Signum, that recently announced that they were enabling staking for Ethereum deposits. So this is something that already happens with Coinbase, Binance, and lots of other crypto native companies. But the Signum news is the first example of an actual bank that's doing it. And I've always thought of that as sort of an obvious use case for banks. I think a lot of people like the idea of being your own bank with crypto, but I think most people don't. I think most people prefer to know that their deposits and assets are safely stored with the third party. I really do. Maybe that will prove to be incorrect 50 years from now. But for now, I think that most people don't like to think about their money too much. And so if you can imagine, having ETH and Bitcoin or stable coins, which don't move against the dollar, they are, examples of dollars, being stored with a bank. Why can't banks offer different kinds of creative financial products on top of that asset class? And that's something that I think would be kind of a no-brainer for them to do. But I think they're trapped in this old paradigm where, for them, a deposit account or checking account is, dollars earning 5 basis points a year versus what the more creative opportunities are in the space. So I would say, yeah, if you're listening to this and you're from a big financial institution, hopefully by now you're taking the digital asset opportunity seriously. But I would also encourage you to take a look at the DeFi space as well, because you just have to look at the growth trajectory to imagine where things could go. The value of the TVL, which is the metric that I mentioned, the total value that's locked in DeFi, 18 months ago was $1 billion. Now it's $55 billion, right? So that's the kind of growth rate that you have to pay attention to.
Yeah, for sure.
So you've gotten a pretty exciting week planned. I hear that you're giving a major address to a huge conference, the 2021 World 5G Convention. 5G, that raises an interesting question, of course, which is what's 5G and blockchain got to do with one another?
What's love got to do with it? What was that, Tina Turner? What's 5G got to do it? Well, it's a pretty juicy topic, and the story is kind of complicated. Let me give a high-level view and point people to some of the research that we're doing. First of all, in case you've been living under a turnip, first G gave us voice, 2G added text, 3G enabled basic mobile computing, 4G we got higher speeds and zillions of apps, and 5G really opens the floodgates with download speeds of greater than a gigabit per second. So that's like 10, 100 times greater now. And it's there's a lot of people saying, well, it's kind of a technology all dressed up with nowhere to go. But I think that 5G has a role in this whole story in a number of ways. It's going to change the role of the mobile device to be at the heart of this thing, which we've been talking about, trivergence. Okay, folks, you heard it here first. Trivergence is the convergence of AI, blockchain, and the Internet of Things. And if you view that triangle, these converging technologies are converging around some stuff. Obviously, they create data, and that's in the middle. And 5G could be one of the technologies in the middle, really moving the mobile device to the heart of all the activities that this technology can provide. And if you want to think about it, pick anything, pick an autonomous vehicle. It's a Internet of Things appliance. It's a lot of the transactions and security and so on should run on blockchain. Of course, the thing is smart, and it's paying attention, it's learning, it's not putting on its mascara or checking the kids in the back seat and so on. And this trivergence is moving into that industry and will dominate it. I think most vehicles a decade from now will be autonomous vehicles. But I think the story is kind of a little more interesting too, because it's not just 5G in the center. I mean, 5G enables things like interconnectivity and scalability and ultra low frequency and efficient energy management and so on. But increasingly, there's a role for the cloud. If you think about it today, 2/3 of Ethereum applications run on the cloud, and nearly all of that is the Amazon managed blockchain. So it raises a really interesting question about what is the sort of infrastructure that blockchain will be run on. And Amazon managed blockchain is a managed service that makes it easy for people to join public networks and create and manage scalable private networks. It works with Ethereum, but also with Hyperledger. And not to get into all of that because we're running out of time, but there are all kinds of benefits to having blockchain on the cloud in terms of being able to rapidly deploy a new network and a new application. But it does raise some interesting questions about the clouds still have a highly centralized nature. And in theory, I suppose Amazon could decide it doesn't like Ethereum anymore and that it's going to create its own platform. So that's kind of interesting too. And then when it comes to 5G, there's a whole flip side. It's not just what does 5G do for blockchain and delivering mobility of these apps, but what can blockchain do for 5G? And I'll just refer people to a very thoughtful paper that we wrote. I know Charlie Morris was, I think, the author, one of the authors, where he delivered the flip side, which is how could blockchain help deliver 5G? And could, in theory, mesh networks on a blockchain platform do what 5G does? And if that were to be true, that would be true extraordinary, at least from a user point of view, not so great from the point of view of the telecom industry, which will be somewhat bypassed in a scenario like that. So this is a whole interesting conversation. And we're having this discussion, and we're doing a lot of research at the Blockchain Research Institute on the topic. The Charlie Morris paper about blockchain and 5G is currently publicly available for anyone at blockchainresearchinstitute.org.
Yeah, it's a great paper, and it's also a fascinating topic. You know, the comment about most, decentralized apps running on AWS is a little worrying in a lot of ways, right? It's like maybe the promise of some of these dApps is a little unfulfilled, which if anything probably speaks to the idea that Charlie raised, which is could you create decentralized infrastructure, not just for connectivity, but also for computing and for storage? And that's where you see, projects like Filecoin, for example, that are trying to replicate or recreate sort of what these cloud computing giants do, but in a decentralized way. That's something that obviously is incredibly intellectually fascinating, and something that I think people should definitely follow along, but it's definitely still very early stage as well.
Yeah. So these are the big architecture issues, and they're quite critical because you need a target architecture. And I remember back in the day, Max Hopper, who created American Airlines Sabre system, which ended up being worth more than the airline, when the airline was worth something. He said, my biggest problem around here is my legacy. He said that I have this installed base, and every time I spend $1 on my installed base, I make it work. I'm building up my legacy. And so he posed the question, how do you create the conditions whereby investments contribute to a desired future as opposed to perpetuating the past? That's where I came up with this formulation that God may have created the world in 6 days, but he didn't have an installed base. So from an enterprise point of view, these are very key questions of architecture. It's not just what platform do we choose to develop on, but how does this relate to the overall IT architecture for our company? And to be sure, increasingly, a lot of that is moving outside the corporation, whether it's to a cloud or whether it's to more distributed blockchain and decentralized blockchain-based infrastructures. And it's sort of like what goes around comes around in a sense. When I started in computing, a lot of companies didn't have their own computers. They used time sharing on publicly available facilities where you can pay for it. And now you're not renting part of a mainframe, but you are renting part of a web service. So big topics to be sure. I'll refer people to one other paper that we did. A guy named Oliver Bussman, who was the former CIO of UBS, wrote a very thoughtful piece, major piece, big project on blockchain and the CIO. And if you're interested in this topic, that piece is also available at blockchainresearchinstitute.com. That's it for this week. Some announcements from the BRI. We've launched the BRI in Korea. Our partner there is Bosagora, and we got big plans. You'll hear about that more. Working with the mayor of a big city to do some massive reinvention of the whole city. Secondly, the Enterprise Blockchain Awards. The submission deadline is coming up, July 31st. You'll see a nomination link on the screen here, and get your nomination in early. We've got a great panel of judges, and there'll be a big black tie gala in the fall to announce these awards. And finally, July 21st, put that in your book. Around noon, there'll be an amazing session that I'm going to chair on blockchain, AI, and the battlefield of things. Interesting topic. How do we prevent some bad actor from hacking a drone and sending it someplace where it shouldn't be going? So again, tune in to blockchainresearchinstitute.org and you'll get access to all this good stuff. Thanks a lot.
Well, I think that concludes our What's on Tap for this week.
Yep.
So lots to think about. See you next time.
What will be on tap for next week? Who knows? Anyway, thanks everybody.
Bye, everyone.
See you soon.
Bye.